What's up, interwebs? It is Tuesday, election day. It's time for the Tuesday market update. Before I get into it, there's one thing I want to read to you guys. After these elections are over, your neighbors will still be your neighbors. Trump won't be there to ring up your groceries, your neighbors will. Biden won't be there to fix your car or help you out with yard work, your neighbors will. Both Trump and Biden will still be in their wealthy political worlds, and we'll be in ours. They'll both be doing their thing while you and I live together, work together, learn together, shop together, eat together, worship together, and pump our gas next to one another. We are what makes America great. We are the ones who choose to be decent, loving, caring, and compassionate human beings. Vote for whomever you choose, but remember, we, the people, choose to shape our communities, not them. You know, I don't get political on this channel much. I'm never going to promote one candidate over another because at the end of the day, whoever's in office doesn't make that dramatic of an effect. Actually, it's the local decisions, especially right now during the COVID. It's our local government that's actually been more affecting our day-to-day lives. So those are important races. President, good to elect, but at the end of the day, it's not going to make a huge difference on your day-to-day life. Now, a lot of people are thinking and concerned about, depending on which candidate gets in, whatever it is, that the housing market might dip. And this has been a consistent concern throughout the whole pandemic and everything else that going on. I'm going to give you guys 4 reasons why I don't think the housing market's going to decline, even after the election and everything, even with COVID numbers going up. Number 1 reason is strong demand from millennials. Millennials were long viewed as perennial renters, like they were never going to buy. And they're now buying, and they're the largest generation population-wise. So they are going to be the driving force of home purchases in the next few years. Mortgage rates, historically low. And because of that, people's buying power has increased. So unless the mortgage rates suddenly increase, which they won't, because the rest of the economy's been down, and that's a direct effect on whether the Fed raises the rate. It's a whole big thing, but as long as the rates stay low, people are still going to be buying. Next is the prices are continuing to appreciate. Again, because demand has still been there, prices, at least in Arizona, have continued to appreciate. I do know some areas of California have actually declined a little bit. Maybe it's because they're all moving over here. We had a crazy number move in the month of September. And then the last thing is history says so. If we look at each 4-year cycle, the year, or especially the few months before an election, things tend to slow up a little bit in the housing market. And then the year after an election is always really, really good for the housing market, barring, I think it was 2008, I think. Yeah, because that was when the whole mess happened, even though that's when we brought Obama on as president. History dictates that pretty much every 4-year cycle, the year after an election is always much better for housing market, movement, price appreciation, all that kind of stuff. So those are reasons why housing market's probably not going to dip. And if you haven't already caught on by this weird angle of my camera, we're going to look deep into some numbers. All right, let's pull up my screen and take a look here. These are the Maricopa numbers for the whole county. For October, you can see we had the active listings jump up over the new and sold, which means our absorption rate is a bit higher than it usually is. As you can see, prices have steadily climbed up outside of the dip around the beginning of the pandemic. Here's the number that I'm saying, that's why I'm saying it's slowing down. I don't think it's going to dramatically slow down, but it's been slowing down in that our sold numbers for October, 22% more than the previous year. Our pending number, 21, almost 22% less than last year. So this is like the first time I'm seeing a number lower than last year's number. I saw it a little bit. It was a slight dip in September, but it could also just be a fall dip as well. But I think a lot of it has to do with the election. And then active listings are actually down from last year, but that's pretty normal because our supply has been all crazy. So let's pop in and let's take a look at Chandler and see what's going on over there. So as you can see, active listings bumped up. They're still below the new and sold, which is still why we have such low inventory. But this is still a really, really popular area. Chandler's super, super hot. This crazy jump up here, if we scroll down to the numbers down here, it's showing an 18.71% change, and that's not entirely accurate, which again is why we use this number here, 12.15% change. The reason why is because we have all these houses here that sold way more. I mean, geez, 550 to 750 was up 74%. 750 to just shy of $1 million was 200% increase. And then we had 8 over 1, like, what is that? 8, 10, 14 houses sell between $1 and $3 million. In the previous year, we had 3. So that big spike is mostly because the price point of houses that sold last month compared to last year is dramatically higher. And again, here's that number that says, I think things were slowing down just a little bit. Not a ton. Still crazy out there, but not quite as frenzied. But the 18 down pending deals are down 18.5%. So I think we'll see them pick right back up. Active listings down as we are used to. Let's take a look at Gilbert. We're going to take a look at 2 more areas. We're going to take a look at Gilbert, and then we're going to take a look at a zip code where I currently have a listing that has not had a lot of traffic. So as you can see, we had new listings dip below solds, and inventory seemingly going up. So we're still under a month in Gilbert. Again, a very, very, very hot area. But we don't have that weird spike. Again, like I said, that was an anomaly in Chandler. But again, it's saying we're up 18% from last October. Year to date, about 12%. I think that is still just a slightly more accurate number, that 12%. And in Gilbert, everything's up except, again, for the pendings. Pendings are down from last year. So still churning right along, but again, solds being up and then pendings being down just gives a little indication of some trepidation, for lack of a better term. And then 85251, this is a zip code I have a listing. It's a condo, townhouse. We are priced the lowest or the second lowest per square foot of any townhouse within like 2 miles of this townhouse. So we're just not getting a lot of traffic. I think that's, and it's a good house, but it's not updated. Everything in it's good quality. It's just was done 20 years ago. So it's not fresh and updated. Fresh updated stuff still flying off the shelves. But as you can see here, I want to show you something. Average days on market, we're at 53. And we've only been on the market like 2 weeks now, something like that. So I have a sneaky suspicion that we're probably going to see an uptick in some attention this coming week after the election's over, but we'll just have to wait and see. I'll make sure I'll tell you guys next week. But again, in the 85251, you can see 24% down on pendings. But this 85251 has got the gambit. It's got stuff from the low 100s. So there's that section just north of McDowell between Hayden and Pima. That's pretty, you get some pretty inexpensive stuff in there. There's also a couple co-op areas where you have to pay cash and you're buying a part interest in the overall property, but you get your little unit kind of thing. Those tend to be cheaper. But then we have stuff that's sold all the way up to almost $2 million. So definitely quite the range in 85251. Great zip code, especially for Airbnbs if either the HOA allows it or if it's a non-HOA house. Anyway, guys, we're going to survive this. Election's over today, and we can stop seeing political ads, and that'll be great. But I appreciate you guys checking in. We'll see you next week on the Tuesday Market Update. Bye, guys.